this class. I'll start this class. Someone to remind us what we covered last. Someone, or whatever we covered in TA. Anything that we've covered in TA. Okay, let me rephrase this question. Someone to mention any POIs that you've covered so far. POIs that you've covered so far. Any POIs that you've covered so far? Someone. Okay, Pius can give us one.
Support and resistance.
Yes, support and no, that's not a POI. No, that's not a POI. Okari.
Fair value gap.
Pardon?
Fair value gap.
Yes, fair value gaps. Yes, fair value gaps. Another POI that you've learned. Pius? Another POI that you've learned. Let's have someone else apart from... Okay, Pius, I can see your hand is up. Any other POI that you've learned? Thomas?
AMD.
AMD, yes, the AMD or the week of strategy, yeah. Another? Joseph?
The block and the BB.
Yes, order blocks and the breaker blocks. Any other POI that you have covered? Any other POI that you've covered? Thomas, you want to mention another one? Okay, let me just remind you. We started off by market trends, and under market trends, we looked at an uptrend and a downtrend and how to trade each one of them. Then after that, we looked at order blocks and breaker blocks. Then after order blocks and breaker blocks, we looked at FVG, the QM and the FVG, the stop hunt, and the Quasimodo patterns. Then lastly, we also mentioned over the last class, we talked about power over week. So just to give a disclaimer, there are so many other ways, not other ways, there's so many other POIs and much more that we're supposed to cover and technical analysis. But just like I mentioned today, technical analysis is quite wide and will take us like a month. But what we have covered so far is enough to start you off. So the other skills you can build on top of what you've learned so far. So in this class, we're going to dive deep into power of a week, how to trade a week. Then we're going to look at equal lows liquidities. Someone to tell us what liquidities mean? I think we've mentioned liquidities before in this class. What do we mean by liquidities? Liquidity. What is liquidity? Thomas?
Liquidity, that's the amount of circulating supply of the particular asset.
Amount of circulating supply in a particular asset. Yeah, you're correct, but there's a certain term I want us to use. That is very correct, actually. Pius?
Ease of buying and selling a coin or token.
Yes, ease of buying. Yes, ease of buying or selling a token in the market. So we're going to look at equal lows liquidity, equal high liquidities, and lastly, we're going to look at trend line liquidities. So let's start with power of a week. We've already defined a week. The week is these thin lines that extend over the bodies, either at the top or at the bottom. And we looked at this. We talked about the upper week, a long upper week, what it represents, and a long bottom week, what it represents. So in trading, Candlestick wicks, also known as shadows, represent price volatility and the range between the high and low prices within a specific period. The high price is represented by the high upper wick, and the low price is represented by the long bottom wick. So understanding the power of a wick in trading involves considering their significance in analyzing the market sentiment and potential price reversal. Just to explain what this means in simpler terms, I'll navigate to my charts, and I remember over last week's class, we are here on the AVAX candlestick, and I basically I remember explaining to you why why a wick is actually a very powerful point of interest. And we said that if you go to a wick, what you'll notice is a wick is actually, or rather, if you narrow down to lower time frames, you'll notice that a wick actually has an order block. And remember, an order block is what? Is a POI. A POI, a point of interest. So just to come back to this, let's highlight our week so that you can all see. This was our stop hunt, but I want us to highlight this week for anyone who was not in class last week, so you can see the power of a week and why we are saying a week can be a P, or rather not can be, it's actually a strong POI. Let me remove this top hunt right here. So this is AVAX USDT on the 1 hour time frame. I want to see this the behavior of this week in a lower time frame. The behavior of this week in a lower time frame. So if I'm to narrow down to maybe 30 minutes time frame, it's 30 minutes here around here. So if I'm to move to 30 minutes time frame and come back to the zone that I've highlighted, what I'll notice is there's actually an order block. An order block. And which type of order block is this? Someone? Which type of order block? Which type of order block is this? On this zone of the week. Pius?
Bearish order block.
Why a bearish order block? Or rather define a bearish order block?
Because of the bullish candlestick before the bearish one.
Yes. So what we define, let's appreciate Pius. We defined an order block, or rather a bearish order block, as the last green before a significant sell, last buy candle before a significant sell. Let's move to maybe a lower time frame so that you can see specifically the last green candle before a significant sell. So if I navigate that, now we'll be able to see that here is our last green candle before this significant sell. Remember, this was the zone of our week. Let me delete that and now highlight my what? My bearish order block. Bearish order block. Remember, we said when you're highlighting it, include even the wicks like that. So I've included my wicks like that, and we said that a bearish order block, from a zone of a bearish order block, let me just name it. This is a bearish order block. Bearish order block. So you expect the market to sell off from that zone. So there are 3 ways you can trade this bearish order block. You can have your entry at the bottom right there. You can have your entry at 50% of that. Where's my gun box? Gun box right here. Use a gun box to measure 50%. It's not working. Delete that. Let me redo that again. So here's my bearish order block like that. So 50% of this, 50%. Here's my gun box. I can use my gun box to have that. So 50% of that. I said I prefer trading 50% of order blocks or weeks. So like that, 50% of that. Or you can actually have your entry at the top of this part. The bottom, the 50% or the bottom of that. So if I move back now to my 1 hour time frame, let's see. If I move back to my 1 hour time frame, what you'll notice is, let me refresh. What you'll notice is, if you took if any person, if a person traded the bottom of this bearish order block, was actually triggered into that trade. If you took 50% of that order block, you'll be triggered into that trade. But if you took at the top of this trade, what will it be, Pius? I want to see if now you understand. I remember you are confusing a missed trade and a stopped out trade. So if I took from the top of my trade, Pius, will this be a missed trade or a loss?
That's a missed trade.
A missed trade. So did I make a loss or did I miss that trade entirely?
You missed that position entirely.
Exactly. Exactly. So if you took from the top right here, you missed that trade entirely. But if you took 50% of that trade, then you are triggered into that. And if you took the bottom of that order block, you are triggered into that trade and you'd ride that profit. So that's basically why an order block is that, not an order block, a wick is such a powerful POI. So I had this example during the day. So right here is the BTC USDT. This is how the trade was looking at around, which time was this? 14, right? If you can see here, 14:27, around 2 p.m. today. 2 p.m. today is when I took this screenshot, and I want us to do it together now. Let's do it together, and we can see how much profit that we are sitting on currently. So it was 2 p.m. I analyzed this chart. I was looking for an example that we'll use to analyze, or rather to demonstrate power of a week. And I found this setup, took a screenshot because I also wanted to see, because I actually entered this trade. So let's see. Coming back to that, it's the BTC USDT on the 1 hour time frame. Right here, the 1 hour time frame. If you look at that, you can see we are almost Pius again. Are we out of this trade yet? Let me zoom out. Are we out of this trade, or we are yet to be out? Are we, to start off, were we triggered? That's the first question. Are we in profits? Second question, and are we out of this trade? Pius?
Zoom the bottom. Zoom the bottom. It wasn't triggered.
It wasn't triggered. Are we in profits?
No.
Why?
Because the position wasn't triggered.
Yeah, but let me just tell you, that's true. But according to my Binance, I also thought the same. I'm just from the gym and I came back and I saw that I actually missed that trade. If you can see that, thumbs up. We missed by a small margin. Only Joseph can see that, and Pius, if you can see that right here. Yes, so we missed that, but looking on my Binance, it was actually triggered. I think it's the price fluctuation or the price difference on Binance and on TradingView. So I don't know why it was triggered, but I was triggered into this trade, and I'm trading in these profits. But I want to ask Pius, are we out of this trade? If you're in profits, are we out of this trade, or we're still yet?
Not yet, but very, very near.
Very near, yeah. So we are almost being tapped out of our profit. But just to confirm, you are triggered into this trade, actually. I think it's the price difference on TradingView and on Binance. But anyway, that's not the point. So I want us to do something right here, just like we had analyzed before these trades. If you can remember this, the confluences, this is the first example that we ever did, and you are building on that concept slowly by slowly. So the first thing that we had learned in the initial steps was the week of strategy. We had the accumulation right here, manipulation move. Remember, the manipulation is the fake move, or rather what you call the Judas swing from Judas. Judas betrayed Jesus. So yeah, it's a betrayal move or a Judas swing or a fake move. Then what you do, you trade the manipulation. That's the first confluence that we had. The second confluence was our bearish order block in this situation, and the bearish order block was in the zone of the what? Of the QML. And no wonder now we had our profit like this, but this setup was invalid because up to now this first setup. So we have setup A and setup B. Setup B, we took our profits, but setup A, we are yet to even move. We actually stopped out. If you extend this, you'll notice we were stopped out at this point right here. That is just to explain that part. But I want us to delete everything right here, this before, so we can analyze this chart, this today's, or rather this current chart together. This current chart. So, let me just quickly delete this. Perfect. So I want us to look at something right here. If I go on my 4-hour time frame, I want us to see something. If I move to my 4-hour time frame, what you are noticing, let me delete everything to make it easier. If I move to my 4-hour time frame, what you'll notice, we have a wick right here. Thumbs up if you can see that. We have a very strong wick right here. So what you have said with the wick, highlight that wick. That's what you've said. Highlight that wick. Then move down to lower time frames to see what? Number one, to see where our order blocks are. Before even move to that, what you can notice right here, that actually our wick, remember we said for a POI to be proven valid, it must have what? Someone. For a POI to be proven valid, what should be there? Because you'll notice a lot of POIs in the market. What should be there? Joseph?
Confluences.
Confluences. And what do we mean by confluences?
Other POS.
Yes, other POIs that are marrying into your concept, or that are merging together to confirm your entry. So if you look at this point right here, you can notice we are having a stop hunt. Thumbs up if you can see that. Let me just use a line. If you can see that, we are having a stop hunt right here. A stop hunt. So that's a stop hunt right there. But if you narrow down to lower time frames, you'll see that clearly. But let me just name that right here. You can see, what am I doing? Let me name that. This is our stop hunt, Then we are having our change of character from this zone, right here, our change of character. So bearing that in mind, we know that all this zone below the change of character is what? Our QML. So what that means is that our POI, or rather this week, is in the zone of a bullish QML. So we have two confluences right now. We have a bullish QML in that zone, but the strongest POI that is in our bullish QML is the week. So let's narrow down to 1 hour time frame and see the behavior of that week. So if you come to this right here, you'll notice we are having someone to tell us a last red before a significant buy is what you call what? Last red before a significant buy. Someone, last red before a significant buy. Our last red before a significant buy. Sly?
A bullish order block.
Yes, a bullish order block. And Sly, from a bullish order block, do you expect to buy or to sell? Bullish.
Buy.
Yes, to buy. Buy. So bullish order block. Let's appreciate Sly. Bullish order block like that. A bullish order block. A bulb like that. And remember what we said, features of a tradable. So we have three confluences right now. Number one, the bullish QML. Number two, the week. Number three, the bullish order block. So in our zone of our order block, we said there are 3 ways to trade an order block. Number one, you can have your entry at this point right here, the top right there. You can have that. You can have 50% of that trade, 50% of that trade. Or lastly, you can have what? You can have the bottom of this trade, of this bullish order block rather. So if you look at this, you'll notice that if you took this part right here, if you took your entry from this zone right here, you'll be triggered into that trade. But if you did not, you'll be stopped out. You'll be triggered from this zone. If you took this part right here, you'll be triggered. But if you took from 50%, you'll miss that trade. And if you took from the bottom of this, you'll miss that trade. And if I look back to my setup, you'll notice that my entry was at the top of this part right here, and you see that's the point. The market came down into that zone and actually went all the way to the take profit. So just to put back how it was. I see, Abdi, you have a question.
Your screen was not visible, but now it's good.
That's good. You can see it.
Yes.
Yeah, I want to go back to this so that you can ask any question. Perfect. If now you understand this setup and how it was, thumbs up. If you now understand the concept of the power of a week, I want to explain now my take profit. So if I go...
Question.
Abdi, you have a question?
Question, Ambrose. Now, that week where we have... you drew the... Was it the liquidity order block or what was that? I mean, the order block which you just drew and there was a week, was that due to the liquidity sweep?
Pardon, I'm not quite getting you.
Where you have drawn the order block, there was an extended week. Could we say that was achieved through a liquidity sweep by the market makers? Or
okay, I'm not getting you, but let me do this.
Liquidity sweep.
You know, liquidity sweep is basically a stop hunt. Remember, that's what I said. Liquidity sweep is basically a stop hunt.
Okay.
Yes. So, but rather, let me explain to you in this manner. Remember, in the 4-hour time frame, right here. Let me refresh this again. In the 4-hour time frame, this was actually a week. This one right here. I don't know why I used but you can see it. If you can see it, this one that I used a gun box to measure, to draw, or rather to demonstrate.
Yeah.
Let me just delete that and use a rectangle so that you can see. This was a week. Right?
Correct.
But we want to narrow down to see the best part, or rather the best POI that you can pick from that week. So for you to see that the performance of that week, you need to narrow down to a smaller time frame. We're in 4-hour time frame. If I go to my 1-hour time frame, what you'll notice is we're having a bullish order block. If you can see that, the last red before significant buy, bullish order block.
Yes.
Yes, Indio. So if you see that, then you can also decide to make sure that your entry is quite precise. You can actually trade this, 50% of this. We have seen even 50% of this was triggered. But to have a sniper entry, or rather a very precise move, if I take 50% of this, you'll notice that it was triggered actually. If I move my chart to the left, you'll notice it was triggered. It was triggered at that juncture right there. But if I want a really sniper move, what you'll do, what you can do is move to a narrower time frame on that zone also. Remember this order block? I don't want to delete this. This is our bullish order block. I want us to narrow down so that you can see it. Our bullish order block, the last red before significant buy. So let me just make sure I've highlighted it perfectly like that. So let me narrow down to maybe a narrower time frame, like 15 minutes time frame. So if I move to the 15 minutes time frame, you'll notice even now better, you can see now a perfect entry. Our last red. Now this thing, we can narrow this down. Can you see that? Last red before significant buy. You can see that?
Yeah.
So I can actually narrow this rectangle to this part right here and trade the top of that trade right there.
Okay.
And I'm sure this is what I was targeting. If you can see that one, and I wonder if you can see this line right here. That's where I had my entry, and that entry I named it as bullish order block FVG. We have our FVG, other confluences. We have FVGs right here that were never mitigated. You can see that one. It was never mitigated, but this one was mitigated. This one right here was mitigated by this one, this part right here. But this lower one wasn't mitigated. So to confluence my entry or my wick, now I've narrowed down to a more specific bullish order block. Then I'm having an FVG right here. So remember I said FVGs act as magnets. They pull the market downwards. As the market is coming down to fill those fair value gaps, it will trigger your entry. Bullish order block, FVG, and in the zone of a QML. I had illustrated a QML, but you can see right here, this is the perfect place to actually draw this. We are having our stop hunt right here, and we are having our change of character right here. If you can see that, you can see that?
Yes.
Our change of character right there. So our form confluences are, number one, we're in the zone of a bullish QML, bullish Quasimodo level. Number two, it was a wick, and we said a wick is a very strong POI. Number three, it's a bullish order block. We have narrowed down to a bullish order block. And number four, we are having our magnet, which is our FVG. And if I move back to my 1 hour time frame, no, it was actually, was it 1 hour? Yeah. If I move back to my 1 hour time frame, you notice that the market came back into that zone. Let me refresh. Came back into that zone of our entry, this one, and it triggered that. From trading view, you can see it seems like it was missed by a small margin, but I've confirmed that my Binance actually triggered this entry, and now it went our way, the way that we had initially predicted. Is that okay now?
Okay, thank you.
Yes. So let me go now to our take profit. The same thing, all these POIs that you've learned. Remember, I said a POI means a point of interest. And a point of interest, in other terms, is it can be an entry. You can use that as an entry, and you can actually use that as an exit to your trade. So bearing the same concept, coming to this, we can see we are having our stop hunt right here. If you can spot that stop hunt, thumbs up. This one right here, the top right here. We are having our stop hunt. Only Ambrose can see that. If you can see the stop hunt at the top right here. Perfect. We're having our stop hunt. Then at the bottom here, we are having our change of character. If you can see change of character or the market structure shift, someone, thumbs up. So indefinitely, that makes what? Makes this leg right here, this zone, our zone of the QML. The QML. But to narrow down, remember we said there are two ways to trade a QML. Someone to remind us, 2 ways to trade a QML. There are 2 ways to trade a QML. Someone. There are 2 ways to trade a QML. Sly.
You can take a point on any point along that leg.
Yes, very correct. But there are 2 ways, 2 major ways. That's very correct because both ways are on that leg. They're in the QML level, the QML zone. 2 ways to trade a QM. Someone to remind us, 2 ways to trade a QM. Sly again.
Yeah, so maybe at the bearish order block.
Yes, the bearish order block. Yeah.
So you can decide to trade it at the tip, or the upper tip, or at 0.5 of it.
Let's appreciate Sly for that, but I'll phrase it better. So remember, we said, let me just, this is a bearish QM, So let me just use the example of a bearish QM. So in a bearish QM, you're having an uptrend like this. Or it's actually these that are drawn. No. So we are having, let me redraw that again. We are having an uptrend. Then something like that happens. So we said that, remember that this is what? Our stop hunt right here. Stop hunt. Then we are having our change of character. Our change of character from this zone right here. Change of character. From that zone right there. We said there are two ways to trade an order block. Remember, this was the last red before significant buy. Last red. Let me have that in red. Last red before significant buy. So what's the meaning of, what's the name we call the last red before significant buy, someone? Last red before significant buy. Slide.
Bullish order block.
So yes, this qualifies being a bullish order block. This is a bullish order block. But what happened is, so from the zone of a bullish order block, we expect the market to do something like this. To come to this zone of a bullish order block, from the word bullish, you expect a buy. So you expect the market to do like that. But the market disrespected this bullish order block. So a disrespected bullish order block becomes what? Someone? A disrespected bullish order block will now become Okari?
Bearish breaker block.
A bearish breaker block, like that. Becomes now a bearish breaker block, like that. And that's what we said now. The first way to trade a QM, remember this is a QM, combination of a stop pattern and a change of character is what we call a QM. So the first way to trade a QM is to trade the bearish breaker block. Bearish breaker block like that. But remember, the ultimate or the optimum sell will come from the zone of the QML, like that. And we said the QML, trading the QML is the best way because not all markets will do this move. They're coming back to the bearish breaker block and having a sell because the ultimate sell will come from the zone of the bearish QML level. And how do you determine a bearish QML level? Any POI that is on this leg that has powerful confluences qualifies being our QML zone. Coming down to a chart correlating that, we can see, let me actually narrow down so we can have a correlation between these two. Number one, you can see our stop hunt. If you can see that correlation, stop hunt right here and our change of character right here. If you can see that, thumbs up. The correlation between this diagram right here and the chart. Perfect. So, number one, we want to look now at our take profit. We are having our stop hunt and a change of character. The first way to trade a bearish order block, not a bearish order block, a bearish QM is the zone of the bearish breaker block. Bearish breaker block. And you can see that bearish breaker block, this one right here, that was a bullish order block that was disrespected, bearish breaker block. This one right here, our last red, you can see it was a red candle, last red before a significant buy. This one right here, last red before a significant buy, like that. So you can decide to trade this, but if you see this market did not respect that, but you can have your take profit. Remember, this in this zone is our take profit that's of importance. So if anyone took their take profit from this zone right here, they were correct, from the zone of the bearish breaker block, because the market will come into that zone and stop them out. They are actually out of that trade as of now. Their take profit was hit. But if anyone took a trade from what? From where? From our QML zone, they are yet to be triggered. Okay. Let me just redo that again. They have to be triggered just by a whisker like here. So if you see now, in our zone of our QML, what POI do we have? We have our last red, our last green before a sell. Last green before a sell. What do we call that? Last green before a sell. Last green before a sell. Slide.
Is a bearish order block.
A bearish order block. Perfect. A bearish order block. like that. So you can decide to have our take profit from the bearish breaker block right here, or from the way I drawn this mine from the bearish order block. And if you see now, you can see why I had taken my take profit from this zone right here, from the bearish breaker block in the zone of the bearish QM, or you can actually have it from this zone right there of the bearish breaker block. If you've gotten that concept of how you can use POIs as an entry or an exit to a trade, thumbs up. Entry or exit to a trade, thumbs up. Perfect. Any question? Any question? Eric?
Okay, can you explain the difference between a change of character and a market structure shift and what? And a minute. A break of structure, change of character, and a market structure shift.
Okay, we'll have it as a question. You're having an uptrend right here. Then you're having a downtrend. You're going to have 4 scenarios. Then you're having an uptrend to a downtrend. And you're having this downtrend to an uptrend. I'll use the same one. So let's start with this one. Hey, what just happened? Let's start with this uptrend. So this is an uptrend. Someone to name for us these parts. Eric, let's do this together. What do we call these parts? Eric?
The ones that you've drawn the lines.
Yes.
They are stop hands.
No, not quite there. You're confusing the stop hand. Okay, let's have someone else to help us. Well, Eric, were you in class when you're talking about market structures?
No. This is my first class.
Okay. So just to give you a refresher, but I'll also send a link. You can rewatch that class. This is a break of structure. Break of structure. Break of structure. And this other one is also a break of structure. In the case of an uptrend. In the case of a downtrend, we don't name that from the higher highs. In an uptrend, we name that from the higher highs. But in the case of a downtrend, we name that from the lower lows. Lower lows like that. So this here right here is our break of structure. Break of structure. And our break of structure right here. Perfect. But now the difference now comes here. The juncture at which we have a market or a trend change or a reversal. You can see this was an uptrend, then the market quickly shifted into a downtrend. So the zone at which we have that reversal from an uptrend to a downtrend, that point right there that we had that trend change is what we call market structure shift or a change of character. So you can call it a market structure shift, or a change of character, like that. The same also applies. The zone at which the market changed from being a downtrend to now an uptrend, like that, is what we call now a market structure shift, or a change of character. Same thing. Market structure shift or a change of character. But I remember I mentioned something very important in this class. Something very important. What did I say about this naming? Market structure shift or a change of character. What did I say about this naming? I mentioned this quite a number of times. This naming. First of all, Eric, did you get the concept now?
Yeah, it's understood.
Yes, but there's something I mentioned. Joseph?
It doesn't matter the naming, Bora, you understand?
Yes, it doesn't matter the name, because you'll notice there's some YouTube videos, they call this a change of character, market structure shift. It doesn't matter how you name it, as long as you understand that this part, or rather what we said, that for the purposes of uniformity in this class, we'll decide that this is our break of structure and this is our market structure shift or a change of character. So it doesn't matter how you name these things, as long as you can easily identify them on the chart, that's okay. Any other question? Any other question? Abdi?
I was asking about how you find out the 4-hour week. Kuna zingine pale bado
4-hour week. Let me go to 4 hours, then you can show me what you're talking about. Yes, here it is. Rephrase your question again.
instead of choosing the green arrow week, why do you choose the other one?
Green arrow week. Which one? This one?
No, the set up the other side.
This one?
Yes, that's a week. Also, we have another one.
Okay. Basically, why I did not pick this week is because if you look at this, it's already mitigated. It's already been filled. If you can see that, if I extend this, that it has been filled a couple of times. This first time right here, this second time right here. If you can see that, you can see that, Abdi.
Yes.
But the case of this week that I took, it wasn't filled anywhere. Let me delete. This one wasn't filled anywhere.
Okay, I get
You
it.
can see.
Yes.
Yeah, it wasn't mitigated yet. It's the same with FVGs. If an FVG has been mitigated, there's no need of going back to it. It's like, for example, me coming back to this week. It has already been mitigated. If I like that, you'll see it has already been mitigated. First time here, second time here, third time here. You understand now the concept?
Yes, thanks.
Any other question?
Question.
Yeah?
Assume you are in a trade and you are seeing that there is an imminent stop hunt. How do you mitigate that? How do you react to that so that you are not, the stop hunt does not hit you, your trade?
I'm not getting you. I've not gotten your concept. Pardon again. Rephrase that question again.
You are in a trade.
Okay, yeah. Let's assume this one, yes.
And from what you are saying is that there is an imminent stop hunt that could hit your trade. What do you do to?
As a take profit or a stop loss?
As a stop loss.
The stop part is at the bottom right here.
I'm
not getting your question. Now, I'm in my trade right here, like right now.
Yeah.
I noticed there's a stop part at the bottom right here. What you can, it's for example, let me just use this example to see. You can see my entry, not my entry. My take profit has missed by a whisk right here.
Yeah.
And the market is selling off. Ambrose, do you think I'm in this trade or I'm not in this trade? I already collected my profits. What do you think?
You have not collected your profit.
I've not collected my profits. Why do you think so? Because my take profit has not been hit.
Correct.
But remember, I can close that trade manually.
Well, if you have not closed it, you are waiting for the take profit to be hit.
But what is the most...
Unless you close it manually, then...
Exactly. So this is what I say, and this is what I do. For example, the moment I just came from the gym, the market was around right here. So this is how I reason personally. I always say the market was around maybe at this juncture right here, this purple line right here. So what I say is it better for me to wait this small margin to my take profit? And remember, there's a risk the market might reverse and I might lose all these profits. This one from this length right here. So which is better, to close manually or to wait for that small profit?
It's to close manually.
Exactly. Have I answered now your QML? I did not get your question, but have I answered your Nini?
No, I was not looking at it that way. I thought there was another way you could mitigate against that stop hand. Maybe have a new entry just below, just after or near the stop hand, you can have another entry, because what I've seen from some trades I do, the stop hand, unless you close manually, you wait for the stop hand to hit, you lose the money or you lose the trade. But
Yes.
if you can then have a new entry, then you can be able to be in a trade and make a profit.
So me, personally, I don't chase trades, and this is what I mean. If, for example, I see that I've already had my setup and I see the market is going against me or anything, I'll close that trade and wait for another opportunity. My number one rule is always to have more than 2 confluences. So what you're talking about is now I'll be trading emotionally, basically, because now I've been I've set up my entries, my exit. Then I've seen the market is going against me. It's going to it has created another stop hand. So what does that mean? Number one, I'm being rational and I'm chasing that trade. I don't. You get, like, I'm chasing that trade.
Okay.
I never want to find myself in a situation where I'm chasing that trade. I always want to sit down, have a setup, and basically do my trade. It either goes to TP or my stop loss. Then I can look for another setup another time.
Thank you.
Another day.
All right.
Yeah. Or you can have this other method that I've been trying out, which is actually okay. So immediately you've been triggered into that trade and your trade is 50% into your take profit. For example, let me just delete this. It's also a good way. Number one, if, for example, this is your take profit. This zone right here, from this entry to our take profit right here is our take profit zone. 50% of that will be around this zone. Let me have 50% of our take profit will be around this zone right here. Let me have a line right there and maybe have that in red to differentiate it, improve my thickness. There, 50% of that. What you do is, now, when the market has reached 50% of your profit, take your profits at that 50%. Okay, maybe you're trading $200. Take a small profit out of that. Take $100 out of that trade and collect some partial profit. Yes, that's the correct word. Collect some partial profit. Then move your stop loss. Remember, your stop loss was down here. was down here. So move your stop loss to what? To your break-even price, or rather to your entry. So that means even if the market now, remember you took partial profits, 50%. Binance actually does provide this. I'll show you tomorrow. Tomorrow we'll be learning about futures on Binance. Binance does provide partial profits. So the market is around right here. Take your profit partially from there. Move your stop loss to your entry. So basically you're breaking even. So it means even if the market goes to your take profit, you'll still reap that benefit because you did not entirely close this position. You just took partial profits. So you can actually benefit from that. And also, even if the market reverses and goes against you, you'll not lose any money because you moved your stop loss to your break even. So once the market taps you out at this juncture, you have broken even. Is that okay? Ambrose? Is Ambrose here?
Yes, I am. I was having some issues with my gadgets. So, yeah, it's understood and it's very well explained. Thank you.
Yes. Any other question? If everything is clear to that part, thumbs up. Okay, so tomorrow, do not worry, we'll be doing this a number of times. Tomorrow we're having futures. We'll also talk about the charts again. The next day we'll also have futures day 2. We'll also be talking about charts. So slowly by slowly, you'll understand this concept. So see you guys tomorrow for futures class day 1. Sly, you have a question?
Yes, but maybe not related to this. So on my trade view, I don't know what indicator I clicked, but it gave me automatically drew the it has given me like the MSB. It has drawn for me the change of character. It has drawn for me the higher lows, lower lows, like that. But I don't know. I don't know what. It also has highlighted for me the blocker blocks, but I can't remember which indicator it is that I clicked.
So you want to delete it?
No, I want to know which one it is so that I can use it for another one.
Okay, so basically it's this one. If you don't know how to use, or rather to identify order blocks and breaker blocks in the chart, so come to this part, the indicators. You can see that where I've gone?
Yes.
Indicators like that, it's actually this one: market structure, break, and order block. So if I click on that, it will show me. If I go back to my chart, it will highlight for me the bearish order blocks and the bullish order blocks, whatever we've been highlighting all this time. The MSB in this structure is what you call break of structure, and the market structure shift, MSB. You can see the market structure shift right here. Is this the one?
Yes, that's the one I was checking.
Yes, and if you want to delete it, let me just show you. If you want to delete it, come to this part. You can see MSOB. Let me just choose maybe 2 of them, moving average. They always list themselves right here. So if I want to delete that, move your cursor to that juncture, then navigate to this dustbin thing. Like that, it will move away. The second one is the EMA. Delete like that.
Okay, thank you.
Yeah.
Thank you.
So see you guys tomorrow. Have a good night and be blessed. Bye-bye.
Bye.
Thank you. Good night.